Hey folks, Anthony Owens here with McKee Financial. Thrilled to kick off this episode of McKee's Market Movers. Before we dive in, a quick disclaimer. The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance reference is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly.
Hello, I'm Josh McGlothlin, your wealth advisor at McKee Financial. I want to welcome you back to McKee's Market Movers, our monthly video series where we're recapping the latest market trends, economic data, and key events. Today I'm going to be diving into September 2024. The month of September began with some challenges, as the first week became the fifth worst start to a September since 1928. Momentum shifted quickly in the second week as the S&P experienced 5 straight days worth of gains. The S&P closed up the month up 2%, and it recorded the first positive September since 2019. The S&P 500 ended the third quarter up just under 6%. This puts its year-to-date return at 22%. The equal-weighted version of the S&P 500 finished up about 9.5% for the third quarter, outperforming the cap-weighted index, letting us know that the market is expanding past just the large-cap tech stocks, which has led the way thus far. Where we sit on the calendar today, we're at the best start for the S&P 500 since 1997, and we just recorded its fourth straight quarter of positive gains. On the economic front, private payroll growth in the month of August rose at the slowest pace since 2021. This marks the fifth consecutive month of decelerating growth. The unemployment rate has edged up to 4.2%, suggesting a cooling but still very resilient labor market. Consumer data is continuing to show a mixed picture. August home sales came in below expectations on a month-over-month and year-over-year basis. First-time home buyers only represented 26% of those purchases, matching an all-time low. Additionally, auto loan delinquencies are at a 15-year high, with the average monthly car payment coming in at $720. With that said, though, the U.S. consumer is still saving. The U.S. savings rate came in at 4.9%, well above expectations, so the U.S. consumer is still maintaining against these tough economic headwinds. In a significant policy shift, the Federal Reserve decided to cut interest rates by 50 basis points in September. This was a larger than anticipated move. Markets had a fairly muted response the day of the cut, but rallied the following day, reflecting optimism that this action could prevent a potential slowdown. Meanwhile, China has also announced new measures to stimulate its economy, including significant cuts to bank reserve requirements and a 50 basis point rate cut, allowing homeowners to benefit without refinancing. These actions are aimed at boosting consumer spending and helping China's economy regain momentum. Now we head into the month of October, historically a solid month for market performance, finishing higher 60% of the time. Now investors should be ready for increased volatility with the presidential election just a few weeks away. As always, keep your eyes on the target and stick to your long-term financial plan. Don't let short-term ups and downs distract you. Thanks for tuning in to McKee's Market Movers. I'm Josh McGlothlin. See you next month.
Securities offered through LPL Financial, member FINRA SIPC. Advisory services offered through Gladstone Institutional Advisory LLC, a registered investment advisor. Gladstone Institutional Advisory and McKee Financial Resources Inc. are separate entities from LPL Financial.